Yes, a very good morning to all of you. Right, so we are starting the chapter on the Caro 2020, right, wherein we discuss the applicability of the Caro 20, and then after the applicability, we started with our discussion on the 21 clauses of the Caro 2020. Right, so what are the 21 clauses? We said, please inform the landlord and the landlady regarding your deposits, records, dues, undisclosed income, repayments, and the issue proceeds. Why? Because a fraud was done by Nidhi, who was a related party, who found out internal auditor. What did she do? Entered into a non-cash transaction without registration with the RBI. Then we said that the company has incurred the cash losses. Then there is the resignation of the statutory auditors. There is the material uncertainties regarding the ability to meet the liabilities. And then you have the 2 points of C, right? The CSR and the CFS, right? In the previous class, we'd already seen clause 1 to 6, right, which was regarding the property, plant, equipment, intangible assets. Then clause 2, inventory, working capital. Then clause 3 and 4, which is regarding the loans, investments, guarantees, securities. Again clause 4, loans, investments, guarantees, securities, right? Then the clause 5, which is regarding the public deposits. And then the clause 6, which is regarding the cost records, where maintenance of cost records has been prescribed by the central government under section 148(1), whether such cost records have been made and maintained. And then yesterday we continued our journey from the clause 7 right up to the clause 14, and clause 15 we just started with that. Okay, right. So what was clause 7? It was regarding the statutory dues, one of the most important clauses in the Caro. Right. So statutory dues have been divided under two: the undisputed statutory dues and the disputed statutory dues. Right. So undisputed statutory dues, what you need to report? Two things. One, whether the company, how regular it is in depositing the undisputed statutory dues. So is it regularly depositing, or is it generally regularly depositing? Or you say, no, this company is not regular in depositing the undisputed statutory dues. And second, those undisputed statutory dues which are outstanding as on the date of the balance sheet for a period of more than 6 months from the date they became payable. Right, so more than 6 months, that is outstanding on or before 30th of September of that financial year. Right, so that is for the undisputed statutory dues. And then for the disputed statutory dues, you need to report on two things. What two things you need to report on? The amount involved. Okay, what is the amount which is being disputed? And second, the forum where the dispute is pending. And what is the clarification over there? That a mere representation to the department does not constitute a dispute. Right, the company needs to go on appeal. A mere representation does not constitute a dispute. Okay, right, so that was the clause 7. Then we said whenever a question on clause 7 comes in the exams, we have to start with as per SA 250. Right, I told you, we have to say hi, hello at so many places. So as per SA 250, the compliance with the laws and regulations is the primary responsibility of the management with the oversight of the TCWG. Auditor's objective as per SA 200 is to obtain the reasonable assurance that financial statements are free from material misstatement, whether due to fraud or error. Right, then after that, what you say? Due to the inherent limitations of an audit, there is an unavoidable risk that some material misstatements may not be detected, even though if the audit is planned and performed in accordance with the standards on auditing. So no guarantee for fraud error detection. Then you say, in case if the auditor comes across any instances of non-compliances, he would modify his opinion in accordance with SA 705. Right, then we came to section 128 of the Companies Act 2013, which says that a company shall be considered to be maintaining the proper books of account if they give a true and fair view, double entry system of accounting, and the accrual basis of the accounting. Right, then section 43B of the Income Tax Act says that certain deductions are allowed only on the actual payment basis, and statutory dues is one of them. Right, so that was the initial part of what you need to write in your answer, and then you write down the clause 7A, clause 7B of the Caro 2020, and then you write down the regularity 6 months and the amount involved and the forum where the dispute is pending. right? So one of the favorite clause of the examiners from the Caro is the clause 7. Okay, then after that we came to clause 8, right? Clause 8, does anybody remember what clause 8 was about? Yes, clause 8, you remember? It was regarding the undisclosed income. That means what did we say? Nope. NUP, transactions which are not recorded in the books of account have now been surrendered or disclosed as income during the tax assessments under the income tax law. Then whether the previously unrecorded income has it now been properly recorded in the books of account, right? So not recorded, previously unrecorded, now properly recorded in the books of account, right? So that is the undisclosed income. That is any tax evasion done in the past, but now it has been surrendered or disclosed as income during the tax assessments under the income tax law. Exactly, it is new. What is new over there? Not recorded, previously unrecorded, now properly recorded, right? And again we saw a question which came that there was the cash sale of 5 lakh which was not recorded in the books of account and the gold was purchased from that, right? So the auditor needs to report the same under the clause 8 of the Caro 2020, which is regarding the undisclosed income. Right, then we came to clause 9, which was regarding the repayment, wherein we said dum, right? All the DD points over there. What was the first D? Whether the company has made any defaults in the repayment of the loans or borrowings to any lender. If yes, then the period and amount of default is to be reported, and you need to give the details, the nature of the borrowing, the amount, principal or interest, the period since which it is outstanding, the number of days outstanding, and the reason, right? And in case of the dues where there is a default in the repayment to banks, financial institutions and the government, then what does it say? Even the lender wise details are required to be provided, in which case, in case of the banks, financial institutions and the government. For debenture holders, lender wise or debenture holder wise details are not required to be given. That was the first D, okay? Whether the company has made any default, right? Then what was the second D? Whether the company has been declared to be a willful defaulter by any bank, financial institution or any lender, right? So willful defaulter, right? Then we had the 9C. What was 9C? Whether the term loans, have they been applied, have they been utilized for the purpose for which they have been obtained? If not, right, then again you need to give the details, right? So term loans, have they been applied, right? So the D over there, it ends with D, right? So applied, right? Then after that we have the clause 9D, which was regarding the funds raised on the short-term basis. Have they been used for the long-term purposes? So again used, so that D over there, right? So funds raised on short-term basis, have they been used for the long-term purposes? Again, it will lead to the liquidity crisis in the company, right? Then we had the clause 9E. What does it say? The company has raised any funds from any other person or entity. Why? To meet the obligation of the subsidiary, associate or the joint venture, right? So not for themselves, but for their subsidiary, associate, joint venture, the company has taken the funds, right? The company has taken the funds, right, to meet the obligation of the subsidiary, associate and the joint venture. So taken the funds, right? So that is what we say over there, the funds, right? So that's again a D over there, right? Again, in that case, you have to mention the amount. And then what does it say? In clause 9E, you are a friend of your subsidiary, associate, joint venture. In 9F, you are a foe of your subsidiary, associate, joint venture. Because now what you're doing, you've raised a loan. So again, D, raised. And raised loans on the pledge of securities of the subsidiary, associate and the joint venture. Then what does it say? Again, the amount and any default in the repayment of such loans, right? So that is the clause 9, which is regarding the repayment, whether the company has defaulted, whether the company has been declared to be a willful defaulter, whether term loans, have they been used for the purpose for which they have been taken, whether funds used raised on the short-term basis, have they been used for the long-term purposes, then whether the company has raised any funds to meet the obligation of the subsidiary, associate, joint venture, and whether the company has raised any loans to on the pledge of securities of the subsidiary, associate and the joint venture, right? So that was our discussion regarding the clause 9. Then after clause 9 we came to clause 10, which was regarding the issue proceeds. What are the 4 types of issue proceeds they are talking about over there? IPO, FPO, preferential allotment, and the private placement, right? So 10A, what does it say? Whether any IPO or FPO, right? Whether the company has raised any monies by IPO, FPO, including the debt instruments, right? So again, in that case, what does it say? Whether the money is raised, have they been utilized for the purpose for which they have been raised? And if not, then DDD. The details along with the delays or the defaults and the subsequent rectification, if any. Okay, temporarily pending utilization, they have been temporarily invested in the fixed deposits, right? So whether subsequently have they been utilized for the purpose for which they were intended to be, right? So you have to compare the proposed utilization, which you will see in the prospectus, with the actual utilization, which you can see in the books of account. Okay, right? So that is the 10A, right? What does it say? IPO, FPO, whether the proceeds have they been used for the purpose for which they have been raised. Very similar to clause 9C. There it was term loans. Here it is issue proceeds. And then you have the 10B. What is 10B? Whether any preferential allotment or any private placement of shares of fully, partially or optionally convertible debentures have been made during the year. Then 1. Whether it is in compliance with the provisions of section 42 and section 62 of the Companies Act 2013, and second, whether the amount have they been used for the purpose for which they have been raised, and if not, then state the nature of the non-compliance and the amount which has not been used for the purpose for which it has been raised. Right, so that was our discussion on the clause 10, which is regarding the issue proceeds, IPO, FPO, then preferential allotment and the private placement. Okay, right, then that completed our clause 1 to 10. And please inform landlord, landlady regarding the deposits, records, dues, undisclosed income, repayments and issue proceeds. Right, then we came to clause 11, which was regarding the fraud. What did we say? Any fraud on the company or any fraud by the company which is noticed or reported during the year. If yes, then the nature and the amount involved is to be indicated, right? So any fraud on the company means it's an external fraud. Any fraud by the company, that means employees of the company, internal fraud, noticed or reported. So auditor noticed it or management came and told it to the auditor. If yes, then what does it say? The nature and amount involved is to be reported, right? So we saw a few examples where they said no material fraud, and we saw a few examples where a fraud has taken place in the company, like say amounting to some 63 kg of the gold or relating to some reimbursement of the expenses or some allowances to the employees, right? So even the nature of the fraud is required to be given, right? So that is 11A, whether any fraud on the company or any fraud by the company has been noticed or reported. If yes, then the nature and amount involved is to be indicated. Then we have the 11B. What is 11B? Whether any fraud reporting has been done to the central government in the form ADT 4, right, as per the provisions of section 143(12). Right, so if you have done any fraud reporting to the central government in form ADT 4 auditor, then that you need to report under 11B of the CARO. And then 11C, you remember 11C, right, something related to the blood types, right, whether the auditor has considered, taken into consideration the WBC. What is WBC? The whistleblower complaints received by the company during the year. Right? So whether the auditor has considered the whistleblower complaints received by the company during the year. Right? So that was our discussion on clause 11. Then what was there in clause 12? What was there? Right? All fingers on the keypad. Right? Immediately you need to type in what was clause 12. It was regarding the Nidhi company, exactly. And for Nidhi company, what do we need to report? Nidhi company, whether the, yes, Nidhi company, 12. So what did we say? 1:20. Whether net owned funds to deposits in the ratio of 1:20 to meet out the liability. Right? So net owned funds, that means equity share capital plus free reserves, no preference share capital, minus accumulated losses minus intangible assets divided by the deposits. Right? So what does it say? Net owned funds to deposits in the ratio of 1:20. So the Nidhi company which we saw, there it was how much? 1:7. So very good. Then what was the second requirement? At least 10% of the investments of the Nidhi company should be in the unencumbered term deposits. That means free of any charges, right? Again, to meet out the liability. So again, the Nidhi company that we saw, it was 10.11% unencumbered term deposits. And then we have the 12C, whether the Nidhi company has made any default in the payment of the interest or in the repayment of the deposits. If yes, then again give the details. Right, so that was clause 12, which is regarding the Nidhi company. Okay, each clause of Caro, you need to know what are the provisions, what are the audit procedures, how the verification is to be done, and what is the reporting which is required to be done. Right, so clause, procedures, reporting. Clause, procedures in the given case, and then the reporting. Right, that is how you write down the answer. Then after that, we came to clause 13, which was regarding the related parties. And for related parties, what did we say? One, whether the transactions with the related parties, are they in compliance with the provisions of section? Yes, whether the transactions with the related party, RPT, whether the related party transactions, are they in compliance with the provisions of section 177 and 188 of the Companies Act 2013. Right, so 177 is audit committee, because audit committee approval is required for related party transaction. And what is 188? It is related party transaction. Right, so for transactions with the related parties, whether the company has complied with the provisions of section 177 and 188. And second, whether the details regarding this related party relationship transaction, have they been disclosed in the financial statements in accordance with the applicable accounting standards. Right, so which would be the applicable accounting standard over here? It would be the AS 18, the Ind AS 24. Right, the AS 18, exactly, and the Ind AS 24. Right, so transactions, are they in compliance with 177, 188, and details have been disclosed as per the applicable accounting standards. Right, so we said whenever we talk about related parties, four things need to come into our mind. What four things need to come into our mind? One, clause 13 of Caro. Second, section 177, 188. Third, AS 18, Ind AS 24. And fourth, SA 550. What is SA 550? Related parties. Okay, how to do the audit of the related parties. Right, so we have an accounting standard. Okay, how to do the disclosure of related parties, and then we have an auditing standard. Okay, how will you do the audit of that related party disclosures? Okay, right, so that was our clause 13, which was regarding the related parties. And then after that we came to the clause 14, which is regarding the clause 14. It is regarding the, yes, the internal audit system. So internal audit system, you have to comment on two things. One, the internal audit system, and second, the internal audit reports. Right, so what is the first one? Whether the company has an internal audit system which is commensurate with the size and nature of its business. Right, we discussed this yesterday. Right, so whether the company has an internal audit system which is commensurate with the size and nature of its business. And second, whether the reports of the internal auditor for the period covered under audit, have they been considered by the statutory auditors. So one, in 11C, you had to consider the whistleblower complaints. Now under the 14B, you need to consider the internal auditor's report. Right, you need to consider the reports of the internal auditor. And then when we were discussing this clause 14, which is regarding internal audit, we also went to one section of company law. Does anybody remember which section of company law we discussed along with clause 14 of Caro? Yes, exactly. Wonderful. The section 138, which is regarding the internal audit. And in that we studied the applicability of the internal audit. Okay, by law, which companies are required to mandatorily get an internal audit done? Right, so what did I tell you? Whenever a list of applicability is being prepared, who goes and stands first in the list? Who is the number one to go and stand in the list? It is the listed companies. Yes. And then apart from listed companies, what did we say? The unlisted public companies having the deposits of more than or equal to 25 crore or having the paid up share capital of more than or equal to 50 crore on the last day. Deposits is 365 days of preceding financial year. Paid up share capital is last day of the preceding financial year, or having the borrowings of more than 100 crore at 365 days during the preceding financial year, or the turnover of more than or equal to 200 crore again at this during the preceding financial year, because turnover is for the year, right? So we said deposits, paid up share capital, borrowings, turnover 25, 50, 100, 200. And for a private company, only one of the two conditions, that is borrowings more than 100 crore or turnover more than or equal to 200 crore, right? For private company, we don't need to check for deposits and the paid up share capital. We only need to check for the borrowings or the turnover. And then we also came to chapter number 16, which is regarding the internal audit. And in that chapter, we went to the question bank. And in the question bank, I think some 7-8 questions were there regarding the applicability of section 138, right? So we covered all those questions regarding the applicability of 138 also in our module 2, the chapter number 16, which is regarding the internal audit, right? So what we need to do, first we need to check the company which we are auditing, to them whether CARO is applicable. Once we know that CARO is applicable, then we need to check whether clause 14 is applicable. When would clause 14 be applicable? Whenever section 138 is applicable. And whenever it is applicable as per section 138, right? Sometimes it may happen that to the company CARO is applicable, but clause 14, they are not required to have an internal audit system. Right? Or there is a situation where CARO itself is not applicable, then so no question of checking or reporting on clause 14. Or there could be a situation where CARO applicable and clause 14 also applicable, because section 138, the limits have been exceeded, or say it's a listed company. Right? So do you understand, everyone? Clause 14, what does it say? Whether the company has an internal audit system which is commensurate with the size and nature of its business. And second one, whether the reports of the internal auditor for the period covered under audit, have they been considered by the statutory auditors? Which essay did I make a reference to over here? Did I make a reference to any auditing standard while I was discussing the clause 14? Yes, I made a reference to SA 610, which is regarding the using the work of the internal auditors. Okay, so whenever you see a question regarding internal audit, one, what you need to remember is the right clause 14 of the CARO. Second, what you need to remember is the section 138 of the Companies Act 2013. And third, what you need to remember is SA 610, which is regarding the using the work of the internal auditors. Okay, and then we just initiated and started our discussion regarding the clause 15 of the CARO. Right? What was clause 15? You remember, director or the persons connected with the directors, and you're purchasing the goods from them, and now instead of giving them the cash, you are giving them a car, right? You're giving them some building or some land or something, right? So what is it you're doing? We said no, barter. Some student mentioned over there yesterday, barter, right? So non-cash transaction. Right, so what does it say? Clause 15, whether the company has entered into any non-cash transactions with the directors or the persons connected therewith. If yes, then it says, then whether the provisions of section 192 of the Companies Act 2013 have they been complied with. Right, so now let's come